Yeah, okay, so you see the size of this rise here. I know it sounds like I'm in the toilet, but it's actually my apartment. The sitting room has no furniture yet because some crazy people decided to start cutting heads off about 30 miles away, so I didn't spend too much money. However, things are cool now, so I'll get I'll get some rugs and things. Anyway, everyone's going crazy because of this rise here, which, you know, if you look back here, there's a couple of days of nice rise. And who's buying up here? Well, it's not anyone that knows what they're doing, that's for sure. Likewise up here, who's buying? It's people jumping in and getting it wrong. And I think if you're buying here, you might get lucky, might keep on going. It's going to retrace anyway, which is the safer place to buy anyhow. Or it could keep on going down. I mean, there's that's not deramping, it's just reality. And if I spool this out a bit, to me, down here is an important part right there, where price shot up, had a pause, and then decided to go again, and that's a major decision point there. And I'm waiting. If I decide to buy more of these, I would wait for another major decision point to be tested. That's what traders do, and these markets move because of traders, not because of investors, and that's just might be an annoying truth for people, but that's just the truth. And if knowing that and saying that makes me a lowlife, then I guess I'm a lowlife. I can live with that. Anyway, so I would either wait for a new trading range to be developed here and then broken to the upside, and take something when it came back down towards that to test it, or I would wait for it to come back down to the historically significant area where price was trading before. Price moves in a very distinctive way. Once you've taken the time to learn that, you'll spot it all over the place, and it's one way of trading is to use that. Many people choose to ignore the way that price moves, but I don't. And that's one of the reasons why I was able to say that the SP500 was going to move the way it moved last week, because you have some very serious heavy buying back here in time. You have to look back in time, or you're going to be lost if you're trying to trade a market, to be honest. If you look back in time here, you can see this spike. I think I can only down to the hourly here, and you can see how violently price took off from this level. So this is some heavy buying. You know, it's an area where previously, whatever the narrative you want to use is, previously people saw this as an area of good value, and the decision was made to make some heavy buying in the market, and off it shot. So when it comes back here, you can see time and again that this same area will have a reaction, at least, if not a full reversal. So that's one of the things to look for. Another thing to look for in the market is where a decision has been made, where there's been a a resistance line, where price has tried to get above it a few times and it hasn't managed. And when it does manage that, that's a major decision point, and there will be a reaction when price comes back to that decision point again. And that's what I was able to make use of with this S&P, if anyone's interested. If you've turned off by now, fine. But anyway, sorry for the moving around so much. I placed this green line on exactly where this point was in the past. This is where there was also some heavy buying, and then when price came back to this, it decided just to ignore that and go straight through. And that makes it a very good place to then, because these are buy orders sitting here that didn't get filled last time, when price comes back there, if it goes straight past, then there can't possibly be any buy orders left there. It's just gone straight through that level. And there was no buy orders there. There must be sell orders, because the market always has something somewhere. There's no empty zones. So when price comes back to an area like that, it's very likely to react again, which is, you see the green line here, it comes down, it has a pause here, and then decides to go past. And this is it breaking down. Guy from Shell. So this is it breaking down, and the then it comes back up and it comes pretty much to this, and you see it here again, to this green line. It's a significant point. Looking for orders, it finds them and off it drops. And where does it drop to? It drops to the previous buying area, and as soon as it gets there, it rockets up again. It comes back down, tests it. There's an interesting thing happening in here actually, and then off it goes. So these are the things to look for reversals. Areas where previously there's been heavy buying, price gets back to that heavy buying area and it does something significant. I can go down to the hourly on this. Oh, I'm there. Go back to the hourly, and when it comes down here, you look for you can go down very small and look for really quite distinct signs of a reversal. So in the case of this, when it first came down to this area, you see it comes down, makes a high, it dips into the previous buying zone, and it makes a new high. Now this tells you that there's possibly a reversal on the way. So what people will do, smart traders anyway, is they'll wait for a retrace. They'll buy the dip off that. So they won't try and buy all the dips, but they'll try and get this first dip, which is here, and this is where the serious buying happens. Off it comes up here again, and yeah, and that makes this a significant area too, and off it goes. So you can use very small time frames to make a trade on a larger time frame, and that can be months or weeks based on a daily trade or an hourly trade or a 5-minute trade or what have you. So also when it's down in here, it comes up pretty strong. It takes out a lot of sell orders that were sitting here, and there's more I can see there, and then when it comes back down, it's a great place to try and take another entry because it has made this sudden shoot. Now this sudden shoot might be half an hour previously, an hour previously, or 12 years previously, but it still has that significance. Certainly it's more significant, I find, than moving averages, which I just, forget about them anyway. So that's the kind of thing I would also look for Gulf Keystone. These are the things that the markets do when they reverse. They don't reverse in space. They reverse at previous heavy buying or heavy selling areas. There you go. I hope that recorded, because I'm not doing it again.